Welcome back. Time now for today's business news. Joining us with the latest on business is Greg Fairley. Now, Greg, more company earnings being announced today. Tell us about them.
That's right, Eunice. Investors have been waiting for these results to be published. We'll find out from an expert what this year's outlook is as well in just a moment. First tonight, though, the UAE's nominal GDP is estimated to have reached 928 billion dirhams in 2010, up by 1.5%. The real GDP, meanwhile, grew 0.6% last year to 517.6 billion dirhams. The latest global research economic review shows that economic growth was refueled by the hydrocarbon sector, which accounted for 34% of GDP. UAE's current account surplus surged to 75.2 billion dirhams from 22.8 billion and now accounts for 8.1% of the GDP. Global says all GCC countries are expecting to post growth in terms of real GDP for 2010. UAE investors have signalled they are more confident and believe the investment market will improve further over the next 6 months. The latest FPI Investor Attitudes report found that 2 in 5 UAE respondents believe the investment market has already improved in the last 6 months. In terms of investor confidence, the index for UAE has increased from 7 to 11 points, which reflects the positive steps taken by the government to stabilise the economy. The report also reveals that increased protection for investors, stable financial markets and stricter financial regulations are key to further increasing confidence to invest here in the UAE. According to Dubai-based financial expert Gary Dugan, the near-term outlook for the global economy is being helped by generally stronger economic growth in many parts of the world. For financial markets to perform this year, investor confidence needs to believe in a sustained recovery. In 2011, equities and commodities in the UAE and near region are expected to be favoured by investors, especially driven by strong demand in the emerging markets of the East. Oil prices, currently at $88 per barrel, could rise much higher this year.
The strength of demand is still surprising people. Meanwhile, supply is still somewhat constricted. So I think those two things coming together means an upward surprise to the oil price and good news for the region.
Underperforming regions like the Eurozone in 2011, where bailout packages seen last year could move from country to country, can be seen as investment opportunities for others.
I think the scare we're going to get, I think as we go through April and May, further refinancing of the Eurozone in certain countries will provide scares. So you'll still see lots of volatility in these markets, but we do think those dips in markets will provide buying opportunities.
The International Monetary Fund predicts global growth of 4.25% this year. China is projected to grow 9.6% and India 8.4%. But there are already inflationary warnings.
I think 2011 will be a pause. I really don't see that China and India can easily continue to grow at the pace we've seen over the last couple of years. Not that it'll be a huge disappointment, it's just sensible that they slow their economies, take the inflation out of it, and then move forward.
Closer to home, word is that bonds, equities and sukuks offer good long-term value. The potential of regional markets is likely to see a good measure of return on investments.
After some disappointments of recent years, shall we say, I think you get a consistent growth story through the next 12 months, maybe 2 years, where people will be pleasantly surprised that this region delivers 4, maybe 5% growth in certain countries. And so far, international investors have not been heavily involved, but we do start to see them knocking on our door. They do want to invest in this region, and I think that will be a driver of maybe a significant rise in markets.
Inflation will be driven by higher food and oil prices throughout 2011. That's not expected to affect government bonds, though, in this region, as they remain well supported. DP World says business jumped 14% last year, reflecting the expansion of the Dubai Port Operators global network and a resurgence in trade as the world economy picks up steam. The world's third largest seaport operator saw the strongest gains in Asia, Australia and the Americas. DP World says its ports handled the equivalent of 49.6 million standard 20-foot cargo containers, up from 43.4 million in 2009. Abu Dhabi-based Waha Capital, which is a diversified investment holding company, has just reported a jump in unaudited net profits. Full-year profits rose 15% to reach 249 million dirhams, driven by a restructuring in the firm's leasing unit. Return on equity increased to 12.2% from 11.6% in 2009. Return on assets reached 6.2% compared to 4.8% in the year earlier period. Earnings per share increased to 14 fils in 2010. Gulf markets ended mixed today. UAE indices ended today's session in the red. The DFM closed down 0.25%, 1,623. Meanwhile, in Abu Dhabi, the ADX ended down 0.29% at 2,666. Here comes a summary of the markets and currencies for a Tuesday. And that is the latest business and finance. Yunus, back to you.
Thanks, Greg.